Hello and welcome back to BW Disrupt. This is another feature interview of Founders Lounge we do. Today I have with me Mr. Sandeep Aggarwal, who is founder and CEO of Droom, which is now a decade-year-old company. Welcome, sir.
Thank you for having me.
Good to have you. Let's start. What's new happening at Droom? What were some of the things you had to do differently in 2022, as 2022 and first quarter of 2023 has been considered as a difficult time period for a lot of startups?
Absolutely, it was indeed a very, very difficult time, I would say, for any technology company, independent of what stage they were, because after 12, 13 years of technology rally, since January 2022, markets started correcting significantly. And it's probably considered to be one of the most severe correction in the market. So we had filed our IPO in November 2021, and we were going to raise 3,000 crore rupees with a listing here in BSE and NSE. And we were going through by the books, by regulatory approval, filing our DRHP, and we had top investment banks of our country on the cover page of our DRHP. But multiple macroeconomic concerns, when they started happening, it became much more challenging for us. And before I go into specific detail, maybe I would say it is not easy to increase the speed of a large ship that we had become. Much more difficult to slow it down, and almost impossible to apply a sudden brake. And 2022, we experienced all three motions, and in a very, unfortunately now, much in a short span of time. So it was a tough time, and we had become very sizable company. We completed, to be precise, 9 years last month, and so we had to all of a sudden think about that the capital market may not be available for an IPO in a foreseeable future. Not only that, but also the late stage funding for a technology company will also be difficult. So we had to really create our first objective was to increase the longevity of the company. So we were always very frugal, we were always very asset light and technology heavy. So that helped us a lot in terms of the choices we made historically. So in shorter period of time, we were able to contain our cost, got rid of a lot of discretionary spend, and then basically started focusing on multiple revenue streams for which we were building product and infrastructure as it is for last 8-9 years. We would have monetized them anyway in long run, but because of the market correction, they became a bigger priority. So just to very quickly answer, we have now divided Droom into 4 parts. One is our core marketplace, which is where you can buy and sell new and used automobile. But we have now Droom Cloud Service. I would describe that as our AWS movement. How Amazon started their own cloud services after 1 decade of their existence. So Droom Cloud Service became that moment, where we have now products and services which we gave to large enterprises such as OEM, insurance companies, banks, and large fleets. Then we have started building our fintech operation called Droom Fintech. There we give loan, insurance, and payment. And these 3 categories actually are very substantial for the automobile category, given that it's a big ticket item and asset must be protected. And third is we also started monetizing. So far we have been among the top advertisers and marketeer in the country, but now we have also started monetizing. We get 200 million plus annual traffic, very high quality traffic. So we started monetizing through advertising. So these are the 3 new initiatives in addition to cost containment. And then basically all our spare bandwidth we are allocating to improve the quality of our existing products or launching new products.
Good to know. So fairly 2022 in a sense pushed you to do much better in terms of productivity, in terms of profitability. Tell us in some of the numbers, what does this scoreboard looks like right now of the company? When you precisely said that we kind of contained the cost, what is your perspective and focus on profitability right now? How far you have covered your way in your business growth? How was your last year in terms of growth numbers of the business?
Right. So calendar year, I would say now calendar year 2022 was our biggest year in our existence. while second half of calendar year 2022, we were still focusing more on profitability and longevity rather than scaling the business. And if we had not done, then it would have been even bigger year. But it was a very big year where we did close to 500 crore rupees in net revenue, and the GMV, which is basically gross merchandise value traded on our platform, was actually almost $2.5 billion. So would be, let's call it, give and take, roughly 20,000 crore rupees. So very large number scale we did achieve. And since then, obviously, scale and profitability take back seat and profitability take the front seat. And if we are able to achieve 60% of our goals which we have set for ourselves for the next year, before March 2024, the company should be fully profitable.
So good to know that even if when you are saying this in a very tough, difficult market conditions right now, it seems to be on a very strong pedestal right now. Also, given the market conditions, you had to withdraw your IPO as well. What plans do you have right now? What is your bird eye view on the sector altogether?
Yeah, so on a first part of your question, our IPO was I would say slated for January to March quarter of 2022, and unfortunately that did not happen. And after that, we took a call as a management that it is better to withdraw that IPO and file it back when the markets are very good. In a hindsight, we did everything right by the books, but in a hindsight, I would say we were in the last we were like, let's say, 45 days late. And if we were 45 days early also, the IPO would have gone through.
Oh,
so it was more of a market risk, no issue with Droom or its marketability, it was a market risk. So we have since then withdrawn our IPO. Right now, predicting future would be very difficult because there's so much, the world has not seen this much level of macro uncertainty for a decade at least, or maybe decade and a half. So, but we think if the market becomes, let's say, stable, or there's no new bad news on a macro front, then perhaps during the Q4 calendar year 24 would be the window when we would reconsider filing our IPO, and depending upon the market readiness and receptibility, hopefully would be listed sometime in calendar year 2025. So that is the first part. Second part is, their automobile is a very large category. When we started Droom, India was the 5th largest automobile market in the world. Now it is third. And still only 5% of Indian households have a car, and 25% have two-wheelers. So we have a long way to go. Right. So while India is the 3rd largest automobile market in the world, only it is 67th in terms of per capita automobile availability. So the category, and in any country, this category accounts for 8 to 12% of the local GDP. So if you do that math, it's a very big opportunity, and if there's a big opportunity, you will always see new players coming in, right? But we are the pure play B2C e-commerce. Other companies tend to have either inventory of their own, or their physical stores, or they will take they will open the very expensive repair, maintenance and refurbishment centers. In our view, in 21st century, when there's a lot of technologies available, if you do this automobile in an old school style, it is very difficult to make money, right? So in a bad market, our model actually got more, while the market is bad, our model got actually more attention because of its versatility, because of its insulation from the bad markets. So players will keep on coming. We focus on our customer and our products, and we think we have built a very solid product portfolio, and it's all based on technology and our own IP, and we will continue to leverage it. Overall automobile market, in my view, as I mentioned earlier, it's a very attractive market. There are a couple of more catalysts coming. For example, I hope you will agree, in next 1 decade, probably half of the cars sold in India will be electric vehicle.
That's right.
So we see that as a new opportunity for us. And there are multiple other opportunities, and as I mentioned in your previous question's answer, we have built Droom Cloud Service, Droom FinTech, Droom Marketing Service. So we are quite busy kind of those three opportunities, I would say, is where Droom was probably in 2016, 17. So if next 3 years they can ramp up to where Droom was before the market corrected, these can become a very large opportunity for us.
When we talk about you being an entrepreneur and a founder, you had already done shop close, if I remember it right, and also there is another vertical that you have started or invested in, that's boundless brands. What has been happening with the shop close? If I'm not wrong, you exited it. Well, and tell us more. What are your other revenues other than Drooms?
Yes.
And also, being an investor, you must be looking at many of the sectors when it comes to investing, and kind of supporting entrepreneurship in India. What's going on there?
Absolutely. So Shop Clues was my first entrepreneurial venture. Before that, I was in Silicon Valley for 15 years. And when shortly after make my trip went public, I thought India e-commerce is going to go through a very massive mass adoption phase. So that time I decided that I should build India's first ever marketplace. That's how I started Shop Clues. I built it from ground up in my home in California, moved to India first time in 15 years in 2011, ran it for a few years, and then I had a personal crisis, so I had to take care of that. Once I was ready to play my inning again, that is when I started I started Droom and only extended support to Shop Clues as a mentor so that it can unleash its potential. So I started building Droom, and that is my bread and butter. I and a few hundred people, that's what we do for living, and we think we are disrupting how automobile should be bought and sold into a 21st century. So, and I will continue to allocate 110% of my time in that. But as a two-time entrepreneur, feel very fortunate. While word unicorn may not hold water right now in a bad markets, but I still feel very fortunate to build 2 of the 110 unicorn India has. So over the years, I noticed that I could bring a lot to young entrepreneurs who are trying their hand and daring to challenge the status quo. So I started helping in various ways. I go and speak in various college and institutions. I speak in the trade bodies and events. Similarly, I started investing in a lot of startups, and I've been doing that. In fact, my first investment was way back in 2008, 3 years before even I moved to India. But India, I have dozens and dozens of investments in various new age companies.
If you were to put in a figure somewhere,
they would be in excess of 50 companies where I have invested. So that that gives me an opportunity to interact with the young entrepreneurs, see what new they are building and how I can contribute, if any. And my job is cheerleading and maybe guide them. I'm not a financial investor, so I do that as a way to give back and being associated with the newer things. And then you mentioned about Boundless. So that is different than Shop Clues or Droom or the 50 companies where I'm angel investor. This company actually I incubated during a tough time when I had to cut cost, withdraw the IPO. There were a lot of things which had to be done in a certain manner. But at the end of the day, I'm a creative person. I am creative not in terms of composing a music or drawing a painting, but I'm creative in entrepreneurship. So my creativity was getting used less when I had to withdraw the IPO, cost cutting, spending a lot of time with lawyers, auditors and bankers. So during that time, for my own brain food, for my own sanity, I said, can I utilize this time to, how someone may join maybe music class or a yoga class. I'm an entrepreneur and I get my energy rather than giving my energy. So I ended up actually incubating Boundless Brand, which is an e-commerce platform for brands. As you have seen in last 4 or 5 years, we talk a lot about D2C or digital first or and lot of brands, almost every brand will have e-commerce as a main channel strategy.
Even if the larger brands,
that's right. But larger brands already have a deep pockets. They know technology, they know marketing.
And a strong infrastructure.
That's right. So, but the small and medium brands do not know whether they should spend their time in building brands or building digital distribution platforms. So we are saying in Boundless Brands that you focus on building your brand and leave the digital e-commerce piece to us.
Okay.
And then also, in order to understand the true pain of the brands, the company is also building its own beverage brand, which will be launched hopefully in very near future. So it's a two-part company. There's a platform for brands, which is an e-commerce, full stack e-commerce brand platform, and then there's its own beverages brand. And the company, we raised $2.5 million, and it has its. I don't spend full time in the company. I have no executive role. My job was first to in the beginning for incubation. Second is I remain as a mentor and someone who's involved in strategy, vision, etc. We have built a fabulous team, and hopefully this company will lower the entry barrier as more and more entrepreneurs in India dare to create their own brand in different categories.
Especially in fintech or tech specifically. Yeah, good to know about that. Given your investors hat, we talked a lot about market right sizing right now. In your observation, what are some of the dynamics that's playing up in Indian diaspora right now when it comes to domestic capital deployment, and also how can we really ensure that this right sizing phase won't come unexpectedly very soon? As an investor, what are some of the things you would like to advise, you would like to suggest for all the entrepreneurs to do it right way? Also, as an investor, what do you think that there are some things that also some of the investors are doing not right?
Yeah, no, absolutely. I think a bunch of very nice questions. So first of all, I would say that India actually has come a long way. When I came here 12 years back to start ShopClues from Silicon Valley, there were probably less than half dozen angel investors. There were probably 5 or 6 VC funds. There were 2-3 late stage investors. There was absolutely no concept of local capital or family offices.
This was 12 years ago.
That's right, 2011, right? In that time, in fact, only, if I'm not wrong, only InMobi was considered to be India's first new age billion-dollar company, and Flipkart was speculated to be a billion-dollar company, but has not become billion-dollar company. But today, if you look at India, we probably have, I don't know, maybe 250,000 angel investors. I have made 50 plus investments in last 12 years in India, and still keep on making more investment. And I know I'm not alone. There are there are plenty of them. Almost every VC on the face of the planet operate from India. There are dozens and dozens of late stage companies. And look at, while Droom was we came inch away from getting listed, at least 12 homegrown companies, new age companies, have gone listed, like from Zomato to Paytm to Nykaa to Ease My Trip. A lot of companies have gone public. So all that is actually, I would say, the new face of India. And in terms of wealth, if I put it, when I came to India 12 years back, the value of all the public and private companies was maybe 3 billion. Today, in a bad market also, it is 350 billion. Right, so we need to, while we are talking about the extremely bad market right now, we should not lose this perspective and see maybe glass half full rather than half empty.
Yeah.
But advice would be, like, couple of things I would say is that in India it's an emerging economy. When the world is growing at the rate of 3-4%, India has ability to grow 7 to 8%, right? So India, you will not see deep corrections. India hardly has seen deep correction. But I lived in Silicon Valley and Seattle for 15 years. Every 3-4 years, you will see some correction. So, anything which goes up will come down, anything which goes down will go up. So these are the cycles. So my biggest advice will be, when entrepreneurs are building the company, they should always focus on unit economics, frugality, and the capital they are raising to build the company is very expensive capital, and it's always in scarcity even in a good market, so preserve it, right? And also remember, there will always be cycle, and are you prepared for that cycle, right? So I think that would be my advice. Investors, I think
anything which investors can focus in order to encourage more flow of domestic capital?
See, I think honestly, that is already happening. While building ShopClues and Droom, I would raise a lot of capital from Hong Kong, Singapore, lot of other, Japan, and there I will notice lot of local family offices run by the rich family, traditional families, and those offices were run in an extremely professional manner. And India, the concept of family office was only limited to a few families. But today, I already noticed dozens and dozens of family offices have come up. They have a professional running those family offices and take care of that. So I think if this is precursor to what can happen after we come out of the bad market, I think India will emerge, in my view. It's already among the top 3 most robust startup ecosystem, but perhaps it will probably will be among the top 2.
That's right, that's right. That's a very positive and encouraging sentiment, and I completely echo with this. To my final question, you have Droom as your mission and vision right now. In the longer term as well as in the short term for 2022, 2023, what are your expectations? What are your plans?
No, so I think, as I mentioned to you earlier, I think first of all, just wanted to clarify the tough time which Droom saw was nothing to do with Droom. It was a market risk, and almost every company, even India's most valued company, has experienced a tremendous stress. So just wanted to clarify that. But yes, so challenge, so right now our job is, can we improve the monetization of our core e-commerce platform, which in my view is India's largest and most scalable, and it's completely technology centric. We don't have any inventory, physical store or refurbishment centers. So reaching profitability there is not a far cry. We were already just inch away from becoming fully profitable. On top of that, we have now 3 different revenue streams. Our subscription model, which is Droom Cloud Service, our fintech model, which is loan and insurance, and Droom Marketing Service. So I think we will continue to build that. I think given that, only, as I mentioned, 5% Indian households have a car, and only less than 1.5% total automobile is transacted online. So, if we do everything right, for next 2 decades, we can be very busy growing probably 3x to 5x faster than the automobile growth of India. That is our inherent potential. One thing we would do differently. While I have taken a lot of pride in creating a very frugal operations, which is technology centric, both in ShopClues and Droom. In a hindsight, I think one thing which is a lesson learned in a much more deeper way is the path through profitability. In my view, in a hindsight, of course, we had a lot of opportunity to deliver profitability sooner, but we kind of we focus more on growth and scale followed by profitability.
Of course.
That is, of course, has changed. Now it is profitability followed by scale.
Yeah. Good to know, and we wish you all the very best so that you get to there very, very soon. And thank you for joining us. Thank you. It was lovely speaking with you.
Thank you.
Thank you.